Hey everybody, I hope everyone's doing well. Thank you for joining me for today's end of day review of the Emini 5-minute chart on Monday, December 22nd, 2025. I want to start by talking about the gap up going into the day. It's a fairly big gap. You can see here's bar 1 of the day, far above the high and the close of the prior bar. By the way, today's Monday, so if I refer to the prior day, Friday, as yesterday, when I say yesterday, I'm talking about the last trading day, so Friday in this case. So especially when there's a big gap, I like to take a look at the 15-minute chart and see what kind of price action there was leading into the day. And here's what we had. So back here, this is the close of Friday, and this is late Saturday afternoon late Sunday afternoon into today, early this morning. And this was actually about midnight Eastern time, or close to 1 a.m. So from 1 a.m. to the open of the day, we have a very tight bull channel. I'm going to zoom out or adjust the price axis so we can get a better look at this. Fairly strong bull breakout, very little selling pressure through here, pullback but testing breakout points, and then another breakout to a new high, fairly weak selling pressure through here. So we have a leg 1, pullback, leg 2, pullback, leg 3 subdivided into 3 pushes. So big picture, the gap up looks like a fairly strong bull trend through here, but we also have a nested late leg here. So a parabolic wedge here and a big picture leg 3. So it's possible we find a correction on the open, a pullback, or a trading range. So sideways to down expectation on the open. But ultimately, the gap up, this rally, will probably get at least an attempt at trend resumption. So in other words, bull breakout, probably a pullback on the open, and then a second leg up. So let's look at the 5-minute RTH again. That's pretty much what we had on the open. Trading range bar 1. Not great for selling, but you are far above the moving average, and it's a decent reversal bar, so probably will get some sort of second leg. Follow through on 2, but a lot of overlap, so it's possibly leg 1, pullback, leg 2, and then maybe leg 3 on bar 3. But a 3-bar micro channel, not a very strong buy above bar 3, probably sellers above, so second leg down likely. First trend resumption attempt for the bulls will probably be minor, but big picture, the big gap up, you can see it as just simply a large bull breakout bar, breaking far above all the bars to the left. That's probably going to get a second, maybe even a third leg in the direction of the breakout. So always in long, but the bears may need a second leg after 1 through 3. So sellers above likely. Now the bulls have a rally, but there's 3 legs in there. Up on 3, down on 3, up on 4, down on 4, up on 5. Suddenly the strongest bull bar in the rally, breaking above a bull channel line, theoretically on a smaller time frame, but also in the sell zone of the sell-off on the open. So it's basically big down, big up, big confusion. And that means it's most likely a trading range. If it's a trading range, we want to buy low and sell high. The market's in the sell zone at resistance, so as strong as bar 5 looks, it's really not ideal for buying, because this may simply be a deep pullback that the bears will sell before getting their second leg down. It's a strong enough rally that it'll probably get a second leg, but the pullback could be deep because of the selling on the open. But big picture, still always in long, bull breakout, minor reversal, higher price is still more likely. So the bulls buying here, they know they're buying at resistance far above the moving average. So if they don't get follow through, if the market hesitates like it did on 6, they may be quick to get out. And to me, that's what's happening on bar 7. Now 7, a double top, bear breakout, reasonable to sell for a scalp. Probably still a minor reversal, and there's probably buyers below bar 3. Bear breakout, pause, second leg down, 9, nested 2 legs down, 1 pullback, 2, 1 pullback, 2. So bar 9, a profit-taking bar for the bears, reasonable to buy to take profits, maybe a little aggressive to be buying it, but not the worst trade in the world because it's a high 2 after a gap up. So reasonable for bears to take profits and for bulls to look to buy at the 3 low or in the close of bar 9. Reversing back up on 10, it's a high 2 buy, reasonable buy, but this breakout 7 through 9 may have been strong enough for its own second leg. We have trapped traders in this area. Breakout point, bar 6 low, so the upside might be limited. So reversal and follow through inside bar 10, breakout bar 11, but testing resistance. The bulls have their second leg sideways, more sideways than up. Bears, leg 1, pull back, leg 2, pull back, maybe they need leg 3. And 7 through 9 gets its own second leg down. But 10 and 11 strong enough for a second leg. So if a trader buys, scales in lower, they're probably going to either make money or at least avoid a loss. And if you're looking to sell here, you're trading leg 3. Leg 1, leg 2, leg 3. So not ideal for selling. Reversal bar 13, maybe the bears are getting leg 3. The bulls will buy and scale in lower. 14, big bear breakup bar, but again, leg 3. So it's kind of similar to bar 9. It's a stairs pattern. We fell below 3, found buyers, they made money. We fall below 9, the bulls will buy again, probably make money. And now it's a gap up, high 1, high 2. And this is setting up a high 3 bull flag, basically a wedge bull flag. So to me, 14, even though it's a bear breakout bar, it's approaching several areas of support. Moving average, breakout points here, support. And it's leg 3. So if we think about the market cycle, wedges correct for a couple of legs most of the time. But in this case, it's a wedge bull flag. So you've got the bull breakout that's likely to get a second leg up, and you've got the wedge that's likely to correct for a couple of legs sideways to up. So selling down here is really not ideal. Your trader's equation is bad. The risk is far and the probability is low, and that increases the probability of a reversal back up. 15, strong bull breakout bar, probably a leg 1 for bulls, breakout, high 3, looking for the second leg, the bigger second leg up, or a major second leg up. So 15 is a buy the close bar, and buy the close scale in, reasonable. Small follow through bar, but consecutive bars closing above the high of the prior bar. The bulls have not had that yet today. Breakout bar 4, but did not close above the high of the prior bar. Inside bar 10, so consecutive bull bars here and here, but this was the first time the bulls closed above the highs of the prior bars. The context is good. The setup is good. Wedge bull flag. Gap up, bull breakout, 3 attempts down, lots of overlap, not good for the bears. 3 legs down, and then a strong reversal up, 15 with follow through. So good for the bulls, buyers below likely. 18, probably a minor reversal. The bears have the argument that it's on a bear trend line. Maybe it's a bear channel. We continue to make lower lows. But if you're selling 18, you're betting on leg 3, getting leg 4. And in general, that's a lower probability bet. It's better to take leg 1 for leg 2 than leg 3 for leg 4. Late legs, leg 3 and later, usually have deeper pullbacks, and some of them ultimately become reversals. So 18, probably a minor reversal, okay to buy and stay long below 18. We did not trigger the sell below 18. Bulls getting their second leg up. Looks like they have a symmetrical second leg. So we may find some profit taking here, but this is another strong bull breakout, and this will probably get a second leg up as well. Smaller follow through, finding some resistance, but probably minor. Broke above the high of bar 1. We'll see if that resistance becomes support on a test. 3 bars down, smaller time frame, that's 3 legs to a breakout point. So 25 really needs follow through. Bulls will buy here, betting on a second leg up and betting that the high of bar 1 became support. Bears hoping it's an endless pullback and we fall back down maybe to a new low. Maybe it's an expanding triangle day, but the price action through here, this is a bear channel on a smaller time frame. This is clearly a strong bull breakout, and this is a lot of overlapping bars, relatively small bars, tails above bars. So you know this is a channel with many legs down, and we're testing support. You've also got the bar 20 high breakout point made by or created by bar 21. So we'll see. The downside here is probably limited. It's unlikely that this reverses to a bear trend. More likely, the bulls get a second leg up and we get a bull channel or a trading range. 29 might be trend resumption. I think 29 is a reasonable buy the close bar for at least a test of the high, but now it's the channel phase, so the upside might be limited. So 30, probably profit taking here. It's probably fine to buy bar 30, but you'll have to be prepared scaling lower because you might be buying at resistance. So finding some resistance there, 31, but still probably a minor reversal. But reversal and follow through, 31, 32. This probably needs a second leg down. So the bulls need a second leg up, the bears need a second leg down. And usually the most recent price action is what takes priority or what is most important. So the bear reversal and follow through probably needs a small second leg before the bulls get their second leg. It's still minor. If you're selling here, you're selling for a scalp. And instead of selling bar 32, traders might sell a pullback instead, sell above bar 32, high 1 at the top of the channel. So that high 1 triggers on 33, traders sell, looking for a small second leg down, which they ultimately got here. So leg 1, leg 2. Now 36 testing support. Bar, the open of bar, the way I see this is the open of bar 29 is support, because this is where the breakout occurred. I'm sure on a smaller time frame we could see a bar within bar 27 or really within bar 28 that 29 broke out of, but the way I see it is 29 is volatility expansion. It's a trend bar, and the traders who, well, we have to think back to, in theory, there's a trader buying and selling on every tick, and the traders who sold the close of bar 28 or sold right on the open of bar 29, they got trapped on bar 29. 29 rallied basically from its low to its high, and that creates support in this area. So to me, this looks like 2 legs down to support in a bull trend, bullish regime. Spike and channel testing support with a couple of legs, so I think it's okay to be looking to buy here. Always in long. Bear reversal bar 37 on a smaller time frame. This is a low one short in leg 3 at support in a bull regime. So 37, probably a buy the close bar. Not very good for selling. And I still think the bulls will get more of a second leg after this breakout. Probably some kind of measured move. Maybe a leg 1 equals leg 2. So maybe a target up here. Let's call it 69, 36, 50. So buying expected here, 39, maybe an outside up bar. Bull breakout, basically a wedge bull flag, kind of like the open. 39 is a buy the close bar. It's a bull breakout. After 3 legs down to support, the expectation is higher prices. Breakout, all of this is a pullback, and then maybe a second leg to targets above. This looks like a minor reversal, not a major trend reversal. So 39 a buy the close bar, but 41, the problem with 41, it's approaching that magnet, but now you have the leg 3 in a bull channel. So probably sellers in this area, the upside's limited, and it might be a profit-taking bar. So if you're long, you get 3 legs to the channel line, you might just take profits on that bar. So if the bulls are selling to take profits, the bears are always selling. So they're selling at the highs in a channel. They sold at this high here, made money. They'll sell at this high and probably make money. So I'm expecting a pullback here. Let's see, did the bulls reach their target there? I'm using the breakout bars 20 through 22. And it looks like if you gave it a tick or two, if you put your target a tick or two below that target, the market reached it. The bar 42 high is 1 tick below that measure move target, so very close on 42. Now 42 closed below its midpoint. That's a bear reversal bar. So reversal and follow through 42, 43. Reversal and follow through signals usually get second legs. The context here is good. 3 legs up, probably some type of trending trading range day, possibly a lower trading range followed by a brief bull breakout and then an upper trading range. This channel is more likely to evolve into a trading range than have a bull breakout into a stronger bull trend. So reasonable sell 43, always in short below 43. So sell the close 43. If you're long for any reason, just get out below 43. And if you're flat, it's reasonable to sell 43. Follow through. Bears make 1R. So they reached their target on 46, which was just right around the moving average and support created by this breakout point. So reasons to look to buy here, but too much selling to just buy. This bear breakout is likely to get a second leg down. So first reversal up, probably minor. 48, reversal bar, looks like an outside bar. Reasonable for bears to exit above 48 and look to sell again below a bear bar. Bulls, maybe they buy for a scalp. 48 strong enough for a small second leg, but I said strong enough bear breakout. This is probably a minor reversal, second leg down likely. Bulls ultimately got a small second leg. On a smaller time frame, this might even be a second leg and a third leg on 51, and then double top 50, 49, and 51. Bear breakout 52. So if the bulls bought for any reason, they probably exit below 52. Bears, if they exited above 48, they can sell again below 52, expecting lower prices and probably a test of the 48 low. $53 racing to support. 48 low expected to be support. Breakout point here, breakout point, high of bar 20. So layers of support in this area. I'm expecting the downside to be limited. I am expecting a trending trading range day with a bullish bias. So I think at this point, this might be leg 3 for the bears. So not great for selling in this area. So 53 might be a profit-taking bar, the way that 41 was a profit-taking bar for the bulls. 3 legs up to the channel line, bigger bar, so take profits. For the bears, 1, 2, 3 legs down, bigger bar, 53 on the channel line. Maybe you just take profits there and then wait for another signal, because now we're approaching support with a late leg down, so it might be better to look to buy here. So the market's at a cluster of support with nested 3 legs down, 1, 2, 3, 3 legs down through here, 1, 2, 3, and then a reversal bar, 58. Traders who are short for any reason can exit above 58. Again, 3 legs down to support in a trading range or a bull channel. So whichever structure it is, it doesn't matter if it's a trading range or a channel. We want to buy low and sell high. Bears have a completed structure, 3 legs down, breakout, pullback, second leg. Now we're getting a decent reversal bar, 58. That's reasonable to take profits above if you're short, and if you're flat, you can buy above 58. Follow through, so reversal, follow through, 58, 59, that's a buy the close bar, 60, buy the close, 61, finally getting profit taking, the bar closing below its midpoint, so finding resistance at the top of the trading range here. This looks like a decent best fit horizontal line. Found resistance here, market rallied to this level, found sellers, rallied here a couple of times, sold off, tried to break above, broke back below, undershoots here, and then testing it again here. So this is a reasonable place to look to take profits, and traders did that on the next bar. Micro double top, up, down, but strong enough momentum, decent bull breakout, this micro channel from bar 58 to 62. First reversal down, likely to be minor. It's kind of like the opposite of this. Bear micro channel, first reversal probably minor, second leg down likely. Bull micro channel, first reversal down probably minor, second leg up likely. So traders can buy, scale in lower, they're probably going to make money. Also 62, it's a micro double top, but context not great. And the signal bar itself, it's an inside bar, bull close, not a very strong signal bar for selling. 63, a breakout bar. Maybe it's enough for a small second leg, but the reversal down, like I said, is likely to be minor. So buyers below, okay to stay long, looking for a second leg up. Bears getting several bars down, might be 3 legs down on a smaller time frame. Also testing a breakout point here. So probably buyers in this area. If I'm a bull, I'm thinking we have a bull breakout, volatility expansion, a pullback, volatility contraction, and then I'm expecting volatility expansion to the upside again. Leg 1, pullback, leg 2. So 65, it's a bear breakout, but more of a buy the close bar to me. It's at support, it's 3 consecutive bear breakout signals, and the bulls have an incomplete structure. Leg 1, pullback, no second leg yet. And the bears had their completed structure. So 66, reasonable stop order buy. Bulls trying to get their second leg, but tight trading range through here. The traders who bought up here, disappointed by the selling, taking profits in the middle of the range, but still a minor reversal. And then the bulls finally getting a better second leg. Bar 70, a breakout bar, reasonable to look to buy, scale in. Maybe you get a second leg out of that one. The bulls looking for some kind of a measured move. You've got the leg 1, leg 2. You've got the bar 42 low. Those look like they're at the exact same price, so I'll just keep the breakout point drawn. So that's a reasonable target for the bulls. Leg 1, high 2, bull flag, double bottom, bull flag, and then trend resumption. Not quite getting there, 71, but minor reversal, not really strong selling. So as far as selling here, not a really decent sell signal, okay to stay long. Bulls have a bull breakout on a very smaller, much smaller time frame. It's a bull breakout, high 1, high 2, micro double bottom, bull flag 72 by the close, expecting one more push up. And then 73, 74, you reach the target. Now we've got 3 legs up to resistance at the top of a trading range. So reversal bar, if there's a follow through bar, probably okay to sell. But bar 75 late in the day, I don't like trading past bar 75. There's just not enough time in the day. But as far as speaking strictly about the price action, 75 is a reasonable sell. 3 legs up to resistance in a trading range. So reversal and follow through, reasonable to sell, scale in, you'll probably get a second leg. In this case, it looks like you get an immediate 1R, or if you put it on the pullback, you would have reached the target. 3-bar micro channel, probably sellers above, second leg down. Outside up 77. That bar is strong enough for its own second leg, but the bears need a second leg as well. So big down, big up, big confusion. Traders will sell bar 77 for the second leg down, but the downside is limited because now the bulls are expecting a second leg up. So we'll probably test the lows again and then come back up and test the highs. The market's in a fairly tight trading range at this point. So buy low, sell high. And it seems to me the support and resistance is somewhere around there. So the bears, 3-bar micro channel, pull back, they get a second leg. The bulls, reversal bar, pull back, and they get a second leg. And that's about it for the day. All right, that's it for today's end of day review. Thank you for watching. And for more resources for learning price action, you can see the links in the description of the video. I will include a link to the Brooks trading course, which is the foundation of my chart reading and trading. And it is an affiliate link, so by purchasing the course through that link, you do support this channel. I'll also include a couple of links to Ali's website, including a link to his breakouts white paper. And finally, for more price action material, or for mostly for trade reviews, you can join my channel membership. That's also in the description of my videos. So that's going to be it for today's video. So thanks everybody for watching, and I hope everyone has a good night.